Hi everyone and welcome to today's morning report on Wednesday the 4th of November with me, Richard Perry, market analyst at Handtech Markets. Your average trading session has got off to a pretty decent start actually, and that's come on the back of the service sector PMIs which have been coming out this morning. You've had some data out from China which actually showed an improvement in the service sector in China to 52.0 on the PMI there. That's certainly helped to stabilise sentiment. Risk appetite has picked up, and you're seeing some decent gains on these equity markets. FTSE 100 up 50 points, which is good. DAX being dragged actually by the auto sector. There's been news out that the issues for Volkswagen have now spread to the petrol cars. Issues over carbon dioxide emissions apparently, and that has certainly impacted across the auto sector in Europe, and that's a big component of the DAX. So that is one of the reasons why the DAX is sharply lower. But in terms of the currency markets, we're seeing the dollar just gradually strengthening again. We're seeing the this is dollar trade weighted, sort of starting to pick up again, pushing higher, and the decent run that we're having also on the oil price in the last few days has just been stabilised today, so that's again helping risk appetite. And just generally speaking, I think the markets are fairly positive in terms of sentiment going into today. Across the day, we've got all these service sector PMIs coming out. We've had, as I said, China out. We've also had the Eurozone data out. And what we're now looking out for is the UK data that comes out very soon. That's expected to come out as an improvement at 54.5, so just ticking higher from that very weak month that we had last time out, dropping to 53.3, so expected to just pick up from there. Then into the afternoon we've got the US data. Now I'll talk about firstly the ISM non-manufacturing data, which is the big number for the day. That's the service sector in the US. Now we've had a couple of months of decline, and we're actually expected to see just another drift lower, 56.5, but still fairly positive on that ISM non-manufacturing data. That's at 3 o'clock this afternoon. But prior to that, we've got the ADP employment report. ADP has been it sort of comes in and out as being a bit of a harbinger for payrolls on Friday. Last month it came at 200,000, and obviously payrolls are very weak, so it wasn't a great signal. But the expectation is for 180,000, which coincidentally is actually the expectation currently for payrolls on Friday as well. And then at 1:30 we've also got US trade balance. Now the US trade balance is forecast to improve to to a deficit of 41.1 billion. So that would be the best since February on that data. But as ever with the trade deficit numbers, we need to look out for what the component movements are, because obviously you would like to see improving exports as opposed to declining imports, because declining imports would suggest that economic activity is is suffering. So there are nuances around that data. So that takes me to my chart today, which is the Aussie actually. I sort of looked at the Aussie at the back end of last week, talking about the fact that I saw the potential for a rate cut. It didn't come through actually, and what we saw yesterday on the RBA was no rate cut coming through, and also a jump on the Aussie. But look at this movement that we've seen in the last sort of 3 weeks. We've seen this sort of downtrend developing, and what we've seen is just a rally back towards that downtrend, and coming back off again. Now spoke last week about this breakdown below 72 figure being a key move that actually gives us an implied target of 70.20. Sorry, 70.20, and I still think that is a pattern that's intact, because you're basically just unwound to that, back to that neckline, and that is interesting. Look also at this RSI on the hourly chart. There is on the daily chart. There is a very consistent sort of pivot around the 50 point. Sort of when you're in a negative configuration, the 50 mark becomes a sell zone. When you're above it, it becomes a buy zone. But again, we've dropped back below it, so it's basically just unwound towards 50. So is this now your selling opportunity on the Aussie? I still think that there is argument certainly for a negative outlook on the Aussie near term. near to medium term. So we've still got these lower highs in place, and you've just basically just unwound back towards this neckline, and you're falling away again. The momentum indicator is just beginning to roll over a touch. So is this a sign that potentially that the bulls have, or the recovery bulls have sort of beginning to run out of steam again? It could well be. So watch out for that. But certainly there's overhead resistance. You would argue initially. Coming in around that 72.70, but 72.95 is the key level, which was that October 23 high, which on the daily chart comes in well back. It comes in as that reaction high there we saw on October 23rd. So a few levels to work with, but certainly I think if the move was starting to gather to the downside, you need to see a test of that 71.50. I think 71.50 near term is your key level of support that you need to look out for. If you break below that, I think you could be sort of accelerating to the downside. So watch out for those levels being tested. But certainly a work in progress on this Aussie chart. But I think this could be a rally that gives you a chance to sell. So I wish you good luck in your trading, and I'll speak to you later. Thank you.